Hello, my name is Joanne Bianco, and I'm a partner and client portfolio manager at BondBloxx Investment Management. In this session, I'm going to summarize our 2023 mid-year fixed income outlook. Let's start with a recap of the first half of 2023. The U.S. economy was very resilient during this time period, defying predictions of a recession. Strong labor markets and resilient corporate fundamentals were some of the major indicators of this strength. And the strength continued despite regional bank failures, tightening of bank lending standards, turmoil surrounding debt ceiling talks, and persistent, although declining, inflation. And it translated into a rebound in performance across fixed income asset classes during the first half of the year, with U.S. high-yield bonds experiencing the strongest performance among fixed income, and long-dated U.S. Treasuries also experiencing a notable rebound. Looking ahead, we have a more optimistic view than we did at the start of the year. We believe that the U.S. may avoid a recession through the end of 2023, or at the very least, avoid a deep recession. We'll continue to monitor the cumulative effect of the Fed's still unfinished rate hike campaign on the health of the U.S. economy, and we're not sounding the all clear yet in terms of volatility for the U.S. financial markets. However, given the resiliency that we see across a wide variety of indicators, we're still constructive on many areas within fixed income, which we'll explore next. Let's start with U.S. high yield. Fundamentals generally remain strong for high yield corporations, and the higher yields available for the asset class can provide greater income potential and also serve as a cushion for potential spread widening if economic conditions were to weaken, all with less volatility than equities. We expect continued performance dispersion among high yield credit rating categories and industry sectors, creating opportunities for investors. For example, investors can dial up or dial down their risk exposure from double Bs down to triple Cs, depending upon their views for the U.S. economy. Or alternatively, they can express their views with specific industry sector weightings. Next up, investment-grade corporates. We think this asset class is attractive at yield levels not seen since the great financial crisis. Yields more than double where they started 2022. The fundamentals for investment-grade corporates also remain strong. Zeroing in on the BBB rating category, it currently has higher average coupon income available and also greater total return potential, in our opinion, versus a broad corporate index. Turning to U.S. Treasuries, higher yields here have made U.S. government bonds more attractive. Investors have choices all along the yield curve, depending upon their investment goals and risk tolerance. For example, short duration treasuries offer higher yields and more price stability, while the middle part of the curve may be more suitable for those anticipating the end of the Fed's rate hiking cycle and/or a slowing economy. And finally, investors who foresee a hard landing for the economy may consider longer dated treasuries, which could provide attractive total return performance in this scenario. Lastly, let's quickly talk about emerging market sovereign debt. We think this asset class could be poised for total return outperformance versus other areas of fixed income during the second half of 2023, supported by resilient global economic conditions, a weaker U.S. dollar, and moderating inflation. In particular, investors might consider a shorter duration approach to emerging markets investing to reduce the interest rate risk associated with this asset class. To conclude, the way investors position their portfolios within and across fixed income asset classes matters, especially in the current environment. To read our full mid-year outlook report, please visit our website at BondBloxxETF.com. You can also subscribe to our YouTube channel and select the notification icon to view our latest insights. But before investing, carefully read and consider a fund's investment objective, risk, charges, and expenses contained in the prospectus. Also available on our website at BondBloxxETF.com. Thank you very much for watching.